Chapter 4 of Principle of Economics, Book 2. This is a LibriVox recording. All LibriVox recordings are in the public domain. For more information or to volunteer, visit LibriVox.org. Principle of Economics, Book 2, Chapter 4. Income, Capital. In a primitive community, each family is nearly self-sufficing, and provides most of its own food and clothing and even household furniture. Only a very small part of the income or comings in of the family is in the form of money. When one thinks of their income at all, one reckons in the benefits which they get from their cooking utensils just as much as those which they get from their plow. One draws no distinction between their capital and the rest of their accumulated stock, to which the cooking utensils and the plow alike belong. But with the growth of a money economy, there has been a strong tendency to confine the notion of income to those incomings which are in the form of money, including payments in kind, such as the free use of a house, free coals, gas, water, which are given as part of an employee's remuneration and in lieu of money payments. In harmony with this meaning of income, the language of the marketplace commonly regards a man's capital as that part of his wealth which he devotes to acquiring an income in the form of money, or, more generally, to acquisition by means of trade. It may be convenient sometimes to speak of this as his trade capital, which may be defined to consist of those external goods which a person uses in his trade, either holding them to be sold for money, or applying them to produce things that are to be sold for money. Among its conspicuous elements are such things as the factory and business plant of a manufacturer, that is, his machinery, his raw material, any food, clothing, and house room that he may hold for the use of his employees, and the good will of his business. To the things in his possession must be added those to which he has a right and from which he is drawing income, including loans which he has made on mortgage or in other ways, and all the command over capital which he may hold under the complex forms of the modern money market. On the other hand, debts owed by him must be deducted from his capital. This definition of capital from the individual or business point of view is firmly established in ordinary usage, and it will be assumed throughout the present treatise whenever we are discussing problems relating to business in general, and in particular to the supply of any particular group of commodities for sale in the open market. Income and capital will be discussed from the point of view of private business in the first half of the chapter, and afterwards the social point of view will be considered. If a person is engaged in business, he is sure to have to incur certain outgoings for raw material, the hire of labor, etc., and in that case his true or net income is found by deducting from his gross income the outgoings that belong to its production. Anything which a person does for which he is paid, directly or indirectly in money, swells his nominal income, while no services that he performs for himself are commonly reckoned as adding to his nominal income. But, though it is best generally to neglect them when they are trivial, account should for consistency be taken of them when they are of a kind which people commonly pay for having done for them. Thus, a woman who makes her own clothes, or a man who digs in his own garden or repairs his own house, is earning income, just as would the dressmaker, gardener, or carpenter who might be hired to do the work. In this connection, we may introduce a term of which we shall have to make frequent use hereafter. The need for it arises from the fact that every occupation involves other disadvantages besides the fatigue of the work required in it, and every occupation offers other advantages besides the receipt of money wages. The true reward which an occupation offers to labor has to be calculated by deducting the money value of all its disadvantages from that of all its advantages, and we may describe this true reward as the net advantages of the occupation. The payment made by a borrower for the use of a loan for, say, a year, is expressed as the ratio which that payment bears to the loan, and is called interest. And this term is also used more broadly to represent the money equivalent of the whole income which is derived from capital. It is commonly expressed as a certain percentage on the capital sum of the loan. Whenever this is done, the capital must not be regarded as a stock of things in general. It must be regarded as a stock of one particular thing, money, which is taken to represent them. Thus, £100 may be lent at 4%, that is, for an interest of £4 yearly. And if a man employs in business a capital stock of goods of various kinds, which are estimated as worth £10,000 in all, then £400 a year may be said to represent interest at the rate of 4% on that capital, on the supposition that the aggregate money value of the things which constitute it has remained unchanged. He would not, however, be willing to continue the business unless he expected his total net gains from it to exceed interest on his capital at the current rate. These gains are called profits. The command over goods to a given money value, which can be applied to any purpose, is often described as free or floating capital. When a man is engaged in business, his profits for the year are the excess of his receipts from his business during the year over his outlay for his business. The difference between the value of his stock of plant, material, etc., at the end and at the beginning of the year is taken as part of his receipts or as part of his outlay, according as there has been an increase or decrease of value. What remains of his profits after deducting interest on his capital at the current rate, allowing where necessary for insurance, is generally called his earnings of undertaking or management. The ratio in which his profits for the year stand to his capital is spoken of as his rate of profits. But this phrase, like the corresponding phrase with regard to interest, assumes that the money value of the things which constitute his capital has been estimated, and such an estimate is often found to involve great difficulties. When any particular thing, as a house, a piano, or a sewing machine, is lent out, the payment for it is often called rent, and economists may follow this practice without inconvenience when they are regarding the income from the point of view of the individual trader. But, as will be argued presently, the balance of advantage seems to lie in favor of reserving the term rent for the income derived from the free gifts of nature, whenever the discussion of business affairs passes from the point of view of the individual to that of society at large. And for that reason, the term quasi-rent will be used in the present volume for the income derived from machines and other appliances for production made by man. That is to say, any particular machine may yield an income which is of the nature of a rent and which is sometimes called a rent, though on the whole there seems to be some advantage in calling it a quasi-rent. But we cannot properly speak of the interest yielded by a machine. If we use the term interest at all, it must be in relation not to the machine itself, but to its money value. For instance, if the work done by a machine which cost £100 is worth £4 a year net, that machine is yielding a quasi-rent of £4, which is equivalent to interest at 4% on its original cost. But if the machine is worth only £80 now, it is yielding 5% on its present value. This, however, raises some difficult questions of principle which will be discussed in Book 5. Next, to consider some details relating to capital. It has been classed as consumption capital and auxiliary or instrumental capital, and though no clear distinction can be drawn between the two classes, it may sometimes be convenient to use the terms, with the understanding that they are vague. Where definiteness is necessary, the terms should be avoided. The explicit enumeration